Alrighty, folks, we just did an episode with Convoy Home Loans where we talked about getting FHA and VA streamlines down to 5.25. We talked about DSR potentially getting to 6.25. We talked about 5 to 10 units getting to 8 with 30-year fixed rate money, that and more. Now I want to talk to the guys about what the heck is actually happening. What deals are getting done? What are people doing with these lower rates, if anything at all? And we're going to start with our boy Dustin. Alrighty, Dustin, what are your clients doing now that rates have fallen?
So we've seen a pretty significant uptick in applications because of where rates have dropped. And as our viewers know, most of our business is on the non-QM investor side. And with that being said, because of where rates were a month or 2 months ago, there were a lot of people that were on the fence with refinancing or even purchasing a property that was previously an alligator, right? Not cash flowing positively, to now rerunning the figures saying, oh, we can be cash flow positive. We can buy this now with 20 down and still be cash flow positive.
Wow.
Whereas, a month ago, let me give a perfect example. So I had one client that's been bugging a seller for about 3 months. Not a huge deal, like a $700,000 duplex. Okay. I've sent him about 2 or 3 pre-approvals where rates would be, and we just kept hovering on like 0.95, 0.88, 0.96. So when that happens on a DSCR loan, there's a very big difference in the rate.
Yeah.
If you're
sub one. Yeah. If you're sub one, no bueno.
You get crushed, right? The lender is going to put probably most of the time an extra 0.75 to a full percent on there. We reran the figures 2 weeks ago, got under contract, cash flowing now at 7 at a 1.15. We're going in completely different than where we were a month ago, because now we've got a client that can buy a property because it's cash flowing.
Yeah. Yeah, rates matter. Also, we're sellers are realizing that they maybe can't hold firm to pricing, given where we were, right? Negative cash flow, it's no option. So I love that, right? Okay, lower rates make it easier to cash flow. Makes perfect sense to me. Jonathan, what else? What are you seeing your clients do?
Yeah, just to piggyback off just Dustin really quick though, with the lower rates and the new transactions, obviously this is more of an encouragement to the listeners. Like if you had old deals that never actually went through, like reach back to all of them, because like not everyone knows what's happening to rates, right? Not everyone knows what's happening to the prices, so if you're the first one in the door and you're like all of a sudden your offer's just slightly lower than what they had it listed at, they have list fatigues. They've had it listed for 120 days, 90 days, and they're like, I got to get this thing sold. And now they're like, oh wait, now I'm getting an offer like a little below, I'm just going to take it, right? So if you're the first to strike, that's what we've been seeing. If you're the first to strike any old stale listings, then you're probably going to get the highest chance of being able to get that property and still cash flow now with the newer terms. If it works. Obviously, if it was too deep an alligator before, you're not going to make it work now. But that's something of encouragement. Like go back to all your old offers that you've sent out, see if it's still available, what the situation is.
Yeah, it's funny you bring that up, Jonathan. And just to piggyback on that, I actually made a call that I was a little nervous about, but now feel great about. I think there's a lot of people doing exactly that, not only investors, but owner occupants. I think the spring selling season started like December 18th or December 15th or whenever that dot plot showed up and rates just crumbled. I see a lot of people going after listings that are older and going, dude, I don't know if you guys are hearing this. I'm sure you are. Multiple offers are back on properties below the median.
Yeah.
It's wild to think about. Sorry, Jonathan, go ahead.
No worries. Yeah, and then another thing that we've been kind of seeing is obviously markets outside of California have been thriving more than markets in California. We've been seeing a lot of traction in like the Carolinas and Ohio more than before. They were hot for a bit and then they kind of tapered off a little bit, but now we're starting to see Ohio become a really, really hot market where clients are starting to go in just because of cash flow. By being able to buy these properties on a lower price but higher cash flow, they're cashing out of their properties in California, going over to Ohio, buying zip codes, all that whole situation. And what they're doing a lot, which is very popular right now with smaller loans, if you're at like $100,000 valuation on each property, and the minimum loan amount's 55, but let's say you put 25 down average, if you package like 5 of those together, then you do like a blanket portfolio loan,
Yeah.
with, we've been doing a lot of those. We package like five single family residences for $500,000, wrap them all together. They pay one closing cost. Obviously, all the appraisals happen, but
Mhm.
essentially it allows them to kind of buy these properties in packages, so that if it's one seller with multiple properties, which is what happens a lot of times,
Yeah.
like they're offloading them, and then you can come in as a stronger offer. Like, hey, I don't need to split anything apart. Just put it all together. I'll buy it all
Yeah.
together. And it allows them to get a better deal on the properties.
Yeah, so I love all of that. I think being a California investor, getting a lot of equity gain, and then maybe 1031ing or selling here and taking your chips somewhere else. Um, I do see a lot of people doing that, so that's pretty interesting. In Ohio, are they just buying houses, units, all the above, none of the above? What do you see your clients really buying out in Ohio?
So, mostly I've been telling clients to focus on 2 to 4 units more
Okay.
than just single families.
Okay.
But obviously single families there still are pretty cheap, so you
Mhm.
can buy it. But like markets like Columbus, and clients might hate me for saying these markets just because they're like, these were my secrets,
Stop
but
talking
like,
about them.
yeah. But like, Columbus, Cleveland,
Yeah.
even Akron, like those places are like starting to be really hot in terms of,
Mhm.
like the price are actually appreciating just slightly, but it's
Yep.
still enough like where you can still go in at a lower price and cash flow, because cash flow is going to be the most important thing if you're buying in that state, right? You're not buying for massive appreciation like California.
Yeah.
So you're going to get a little bit of cash flow. And if I've been telling clients go 2 to 4 unit, because if you just go 1 unit and that tenant leaves, it's going to be harder to find someone. So
Sure.
just go 2 to 4 to mitigate the risk, especially if the price difference is not that much.
There you go. I like it.
Yeah.
Alrighty, Dustin, bring us home. Tell us one more story of what your clients are doing in this lower and lower rate environment.
So this I was gonna say something different, but I wanted to piggyback kind of too off what John was saying and investing in, the Midwest or other areas that maybe isn't your backyard. So we work with a few different like turnkey providers, right? They do
Sure.
everything. They send you a flyer. It's like you can get this property at this rate. It's going to cash flow this. You only need to put down this. Great investment, right? They got 100 of them.
Mm.
I had a client that was, look, I like a lot of turnkey companies, but you still need to make sure that you're doing the work yourself and don't just rely on, hey, they sent me a flyer that said I can get at the time, this was like 2 months ago, they were quoting DSCRs at like 599, put 20 down. I was like, look, go with them. I don't think it's going to happen. It's a great deal if those numbers, pan out. But I'm telling you right now, DSCR is not at 599. He
Right.
called me 2 weeks ago, said, hey, look, got to the signing table, rates were way different. Can you see if I can get this to cash flow? Told him, look, no, like right now you can't. This is a doctor, client that I had that actually lives in Newport Beach. I was like, look, if you're going to invest anywhere that's outside of Newport, Orange County, Southern California, don't trust somebody that's just on the internet that has great
Yeah.
five-star
Come on,
reviews.
guys. Be smarter
Fly
than
out
that.
there, make
Yes.
sure you know the realtors there, make sure you know the investors there. Don't just put money on it because the website tells you they got 55-star reviews. And I just, don't want people thinking that it's easy to invest in real estate. If you're
Yeah.
not doing
Stop
the work,
stop lighting money on fire. That's just a bad
exactly.
idea. That's a bad idea. Well, I'm glad you brought that up, guys. You're amazing. I want to wish you and your families a happy holiday and a Merry Christmas. I will be around next week if you are, so we could do our Thursday conversations. Dustin, Jonathan, where can people reach out if they want to get going, get a file started, start a streamline refi, whatever it is? Where do they reach out?
Go to convoyhomeloans.com and let us know you came from MORAD. Side note, Dustin and I are always working.
What?
Always. So we
It's
don't
a
sleep.
holiday, not a holiday week or holiday
We
month.
work. Yeah.
Thank you. Holiday.
It's a holiday, not holiday week or holiday month. There you go.
Exactly.
Thank you.
All right.
Yeah.
Take care, guys.